I'm going to show you a successful scalping system you can use without any indicators. All you need is a basic understanding of price action and market structure. And at the end of the video, I will give you a bonus, so make sure you watch the whole video. Let's dive in. In this video, I'm going to show you 4 different examples, 2 on EURUSD and 2 on Bitcoin. But before I do so, it's important to understand the underlying foundations for this approach. We're going to be utilizing supply and demand areas, or horizontal support and resistance. In addition to that, we're going to look for one specific candlestick formation. Now, let's take a closer look at one of the examples and I show you exactly what this looks like. This system is based on horizontal support and resistance, also known as key levels. To start, we need to understand what a key level is. Now, simply put, a key level is an area on the chart where price has historically had strong reactions. Key levels appear on the chart as horizontal support and resistance, where price has consistently reacted. These levels are visible on the chart as blue rectangles or horizontal levels, as you can see. Here you can see resistance above. Now this is where price experiences a bearish rejection. Now price moves up into resistance and then retraces back down to support. It's a movement from one key level to the next, from resistance to support. This concept forms the underlying foundation for the system we are going to be trading. Now let's take a closer look at how to actually draw these horizontal levels on the price chart. And here we have the EURUSD chart on the 5-minute time frame, and I'm going to mark the potential key levels that might indicate a range forming. On this chart, you can clearly see key levels where price has had significant reactions. One level shows a strong reaction, which also aligns with an area that price has used as support in the past. Another key area represents resistance, where price previously retraced after testing that level. To apply horizontal levels to your chart, start by identifying areas where price has shown clear reactions, either as support or resistance. Mark these areas using the candle closest that defines the level. Extend these levels across the chart to create horizontal lines that will guide you and your trading decisions. These lines encapsulates the resistance area and the support area below, forming the key levels that you will use in your trading. Now that you know how to apply supply and demand areas, or horizontal support and resistance, in a straightforward way, let's move on to the actual entry triggers and how to execute on this strategy. As I've mentioned earlier, one additional thing we're looking for with this system is a specific candlestick formation to help us determine our entry areas and give us a reliable entry trigger. That specific trigger is a engulfing candle. Now let's break down what an engulfing candle is. Essentially, an engulfing candle is one where the body of the candle fully engulfs the body of the previous candle. If the body engulfs both the body and the wick of the previous candle, this is known as an outside bar, which is also something you can use. However, if you are familiar with identifying bullish engulfing candles or bearish engulfing candles, spotting an outside bar becomes straightforward as well. Once you identify an entry trigger with an engulfing candle, you can enter on the close of that candle. And when it comes to your stop loss placement, you have a few options. You can place it below the low of that candle, below the wick, or below the previous wick. But personally, I prefer to place the stop loss below the low of the structure that created the entry trigger. Next, we will need to decide on our take profit target. Now we aim to set our TP at the next key level above, which in this example is here. However, it's crucial to front run that level slightly to ensure that we secure profits before any potential reversal at that resistance. And we see that TP being hit right here, and now we'll look for a second trade setup on EURUSD. This time, we're looking for a bearish engulfing candle at resistance. As approach apprises the resistance area, we spot a bearish engulfing candle. We enter on the close of that candle, placing our stop loss above the key level. And we set our TP just above the support level below, front running it slightly to secure profits. This approach is very simple and effective. When price hits resistance, you wait for a bearish engulfing candle. When it hits support, you wait for a bullish engulfing candle. You place your stop loss below the low of the structure that created the entry trigger or the key level, and you set your take profit target at the next key level, making sure to front run it a little bit to maximize your chances of success. And now finally, let's take a look at Bitcoin. Here we have Bitcoin on the 5-minute chart, and I've marked out 2 key levels here, just as we did with EURUSD. And we're looking for a bearish engulfing candle at resistance and a bullish engulfing candle at support. Let's see if we can find an entry trigger. Now you might have considered entering on that candle right there, but notice there's also support here. I decided to wait for this support level to break to the downside before looking for a trade. This breakdown confirms that the uptrend is reversing and we're likely to see a move down to the key level below. Now let's see what happens as price approaches this key support level. We see a strong bullish candle that engulfs the previous candle. While it might not be the perfect bullish engulfing candle, it technically qualifies. So as we enter on that one, the stop loss is placed below the level and we front run the level above for our take profit. This trade hits TP almost right away. Now that we are back at resistance, it's clear that we are in a trading range. Since we are at resistance, we're looking for a bearish engulfing candle. There's a bearish engulfing candle right there. We enter on the candle close, place our stop loss above the level and front run the level below for our TP. Now it's safe to say that the level below is a strong support and that's where we set our TP. The trade plays out beautifully with TP hitting right there. For the next trade, there's actually a bullish engulfing candle right here. So we take that trade. The risk to reward on this trade isn't huge, but because of the win rate of this system is quite high, you can't afford to have a negative risk to reward ratio. As price does move down to support, we could have entered another position right here on that bullish engulfing candle, meaning that we'd now be in two positions. Both of those positions will hit PP right here. Now this range did provide us with a 100% win rate. Of course, this will not happen all the time, but the win rate of this scalping system tends to be quite high. And that's it. It's really that simple. Now, as promised, here's a bonus. I'm going to show you an indicator that you can use with this system to increase its profitability. And that indicator is called the Stochastics RSI. Whenever you have an entry trigger, such as when price comes down to support and you see a bullish engulfing candle, you'll want to check that the Stochastics RSI is below 30, preferably also giving you a bull cross. For example, in this setup right here, you have an entry trigger with the Stochastics RSI below 30. On the close of that candle, you also get a bull cross, which occurs when the blue line crosses above the orange line. By incorporating the Stochastics RSI into the system, you can definitely increase the win rate, so I highly recommend trying it out. This system is very simple to backtest. Just add the horizontal levels to your chart and start testing this strategy. I'm confident that you will see great results. Now, it is important to remember that trading is more than just technical analysis. It does involve trading psychology. So make sure that you check out the videos we've done previously on trading psychology. Thanks for sticking around to the end of this video, and I truly hope that this scalping strategy brings you closer to your trading goals. Now, remember to like, subscribe, and hit that bell notification button so you never miss an update from Prime Expertise Academy. We got plenty more content on the way to help you become a better trader. So I hope to see you guys in the next one.